Well, good afternoon, Maverick traders. It is November 13th. Joe with you here on a Wednesday. Let's get into it. You guys know how this works. Take responsibility for the outcome. I'm going to break down the meaningful news of the day. Let's see if we can take a look at something technically to get an advantage. And as always, we will share trades.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you will see that we actually are showing a little bit of a consolidation. We had the election surge. Let's jump into the daily news here. So the election surge looks to be slowing. Now, I don't want to say it's going to correct, it's going to fall apart, but at least I think the euphoria might be kind of subsiding. We had a conversation about this about a week before the election. It wouldn't have mattered who won. It's the clarity of who won. And then what you're going to get is, I like to refer to it as political posturing. It's difficult to follow, but it is very aggressive and it's very specific. Now, what's neat is once it's done, we can get some sort of a consolidation or a corrective action. So let's keep an eye on the corrective action, and let's kind of ignore some of the larger stocks that had the bigger moves to the downside or upside, but we got to focus a lot more on the sectors. Also, folks, I'm going to talk about this here in a minute, but the CPI was in line with expectations. This creates something that, personally, folks, I haven't seen before, an exact inline soft landing. Take a look at it. So a month over month, the core was at 0.3 in line with expectations. The month over month outside the core, 0.2 in line. Year over year, 2.6. We have a Fed that has made moves that aren't exactly what the economy expected and exactly where we have. Okay, so how do we finish? Flat. Well, I'm not going to say flat. Now, I've seen this over the last few days. So the Dow's flat, 0.11%, but the S&P put in a 1.4% gain, where the Q's dropped about 0.25%. The Russell's down, another 0.95%. They had a huge move down yesterday as well. But boy, folks, if you take a look at that chart, a huge move down yesterday versus what they've done since the results is a drop in the bucket. Oil down a little bit, kind of flat, and then gold down. It's just a lot of posturing, and posturing is super difficult to trade unless you're already in it. So the only thing I can do is kind of show some charts that, hey, this is going up, this one's going down, all of that. But when you get your first corrective action, and that's what I want to focus on, we can actually get a little bit more clarity when it comes to sentiment in the longer term. Take a look at the advanced decline line, 60% declining, 36% advancing, 45.55 on the above below the 50-day moving average. So yes, it's absolute push and pull. Stocks are getting punished and rewarded based on expectations of political results, blah, blah, blah. It doesn't matter. It's a very difficult time to trade. However, I have found that if you stayed something bearish, you stayed in something bullish, you should be okay if you're very slow to react. So let's just jump straight into it. So this is the kind of the exciting part for me. I'm looking forward to this. Is this going to consolidate? Is this going to fall apart? Rob made a really good argument about this yesterday. We've got a really good support level here that is super healthy with a pullback to that far. Does it happen? We don't know. If we have consolidation up here and we get this high base with a breakout afterwards, well, then that's great. But what we need to focus on is what is participating, what is not correcting, what's not falling apart, what is moving higher. So what we got to focus on is what corrects the most, what sustains the most, what sector emerges. If we see this over multiple days or a slow correction, I think we can get a little bit more clarity. Let's take a look at the Qs. For those of you that have been wondering that, hey, this an SPY thing? Is this a Dow thing? Or is this a tech thing? The answer is it's all of them. We got to get more specific in the sector within each. And that can only be shown after a few days. We got to let the exuberance kind of wear itself off. As we move over to the heat map, folks, you can see it's a push and pull. But how long do these go, and for where do they turn? And it's kind of this, hey, let's just throw the dice. We're throwing that out there. We'll see what we grab. Some things are good, some things are bad. But when it comes to an overall sentiment focus, it's going to be difficult to see until we get multiple days past the event. So I'm going to let this stuff settle, folks, and then, let's make some decisions. So the market outlook does not change. I mean, it's pretty much a high base. And what I like about it is the consolidation after surge. How the market corrects and how they recover is what is going to give us the advantage moving forward. So +1, I think we're extended. Of course we are. We're extended. I think this kind of burns itself off. Maybe we high base or pull back. So I'm going to be cautious here. But overall monthly outlook, of course, we are breaking the new highs. The markets, and more importantly, folks, the economy is very strong. So let's take a look at some potential trades here. A lot of my trades that I look at personally, I need confirmation, but I want to share them with you before that happens. So take that with a grain of salt, but that's the list I have. Let's take a look at our first bull. This is Walmart. I just like where it's at, where the sector lies. I am a chartist, and what I see here is an ascending triangle that broke, and I see another level here, just about 83.5 with an ascending triangle that broke. Yeah, it broke with a weird candle because it gapped up and came down, but guess what, folks? It is moving higher and pushing levels. Another ascending triangle to push higher. Shorter term, something diagonal, sideways to up, but it is a slow, steady mover. I'm not sure where it's at when it comes to the earnings side of things, but it is definitely in favor and something that might be potentially something to look at when it comes to the bull side. If you guys are worried short term, well, let's see what happens a little bit later. Let's get into Micron Technologies. I like this as sideways. Yeah, it did show a little bit of weakness here, but this is the channel I'm looking for. If this can actually build, let me build this here, a reversal signal of some sort, like a hammer candle or a doji, and then confirm it to the upside, well, my target's going to be back up to where it was. This is a cool sideways trade, something maybe a condor, a credit spread, something like that. But I wouldn't do it much past a week, maybe 2 weeks at most, and just to allow it to kind of oscillate and kind of figure out where it's going to land. Last one I'll give you here is another bear. This is a bear. This is Seagate Technologies, STX. I just like the way that this closed. It closed on its low, right? So we've got a Marabozu on close for you technical junkies. So it closed on the low of the day. Unfortunately, that means this could gap, so we could see it kind of break and fall a little bit lower, which makes it difficult for us to get into something bearish or some sort of a combo that gives us the advantage, which means it might have a little bit of a bounce. But keep an eye on the support level here at around 99. If it stays around that level or lower, something sideways to down, right? We do credit spread. I'm not going to get aggressive on the target side, maybe 96. So something maybe sideways to down might be a decent trade on that. Now, overall, folks, I'm really not looking for anything. I'm not building my portfolio now. I'm not. But when it comes to where I go next, election posturing looks to be slowing, and it's posturing. Literally, this candidate won. You're going to get a massive flood of buying and selling in all sorts of different directions. It's posturing, and it's going to take a while to do so. Individual stocks reacting more than overall sectors. We got to allow the sector to kind of pan itself out. Right now, we're not getting that. It's a lot more specific stocks. So let's follow the sectors. As we get a consolidation or even a pullback, would be kind of nice to see the ones that actually survive. Soft landing economic-wise, the Fed's on track as the CPI comes in line with expectations. I showed you that. I can't believe how in line they are. I haven't seen this. I've been doing this for 20 years, folks. I've never seen a soft landing, and this is the first time I've seen it. So, we're learning together. The overall debate will be on the Fed's next move. Are they too aggressive? Should they cut? Should they not cut? Is 25 basis points too much? Should they let it go? Maybe cut next? Blah, blah, blah. And there's going to be no right answer. What we're looking for is the reaction of after the action that the Fed takes. And that will give us a little bit more clarity. Earnings reports are still out there. We got Cisco tonight, Disney and AMAT tomorrow or the next day or so. So keep in mind that we still have that. But overall, folks, I really think that we are at kind of an apex here on the results, political results, and we'll be able to kind of follow along when it comes to sentiment. It's difficult to do. It's hard to react to, but just be patient and allow it to happen. All right, guys. Well, thank you so much for listening. And, of course, we'll talk to you next time. Bye, everybody.